Hello and welcome to another Commodities Corner here on Dukascopy TV. And after examining some of the driving forces behind the price of coal and oil earlier in the week, we're going to be focusing on gold today, as this week is packed with market-driving events. Joining me on the line from London is the Head of Investment Analysis at the Gold and Silver Club, Nick Calsey. Thanks for joining me today, Nick. Now, following gold's recent decline to a two-year low of 132 on April 16th, prices have rebounded back above 140. Do you expect gold prices to continue climbing?
It's a very interesting question, Thomas. What we've seen over the last couple of weeks is gold price almost dropped from 1550 level down to 1321. So prices really dropped down to the lows of 1321, and then from that level it almost became a buyer's market. We saw a lot of the big banks in the emerging market, so for example Turkey, Kazakhstan, Russia, and also Asian banks coming in and buying all that gold, which has really supported gold price, and it's slowly been grinding back up to where we are today. So we're around 1450 at the moment. That's almost a £1,000 move to the upside from the lows hit 3 weeks ago. Now, before we get ahead of ourselves, gold is still in a downtrend. It has been in a downtrend since September 2011, and I still think the market is very weak. Gold is still very volatile, and I think this is just a short-term trend, and we could see some further selling in the near future.
Now, the US economy saw a solid improvement in the first quarter of 2013, which has raised speculation among some analysts that the Fed will end QE this year. But there's been no clear-cut evidence the US can sustain this improvement.
If we take a look at yesterday's FOMC meeting statement, I think that gives some clues to what's happening. Even though QE1 has been strong in terms of the economic data that's been coming out of America, with the Fed continuing to buy 85 billion worth of assets each month, I think that kind of hints that the situation hasn't really improved and it hasn't really gone away. But then they also made another statement, which was that they may increase as well as decrease QE. So I think if you take that aboard and you look at what the Fed's overall goal is, the overall goal is to get employment down to 6.5%. So right now, over the last few months, the employment rate has been around 7.6, 7.7. So that's still, it's just nowhere near where they want to be. So I think what we'll see from the comments that the Fed made yesterday is if they don't really get close to where they want to be, I think they're going to need to be a lot more aggressive on QE. I think there'll be a lot more money printing in the future, and I think tomorrow will really give some sort of indication as to whether the market is improving or whether the Fed needs to do a lot more.
Many analysts I spoke to towards the end of last year were so confident that gold prices would break through the 2,000 barrier this year. How did they get it so wrong?
I think last year was it was an interesting time. There's a lot of negative economic data coming out of obviously the US with our debt situation, but then also the Eurozone. We saw a lot going on with the big bailouts across Cyprus, Greece, Italy. The picture wasn't looking too good, which really created a strong case for gold. And then a lot of the central banks at the time, they were buying gold very heavily. So it did make sense. It did really match up in terms of the fundamentals and also the technicals to really have that projection on gold, and it has been going up for the last 13 years. So it has been in a very strong bull market for the last 13 years. If we take a look at the charts, you can see right now we're we're close to a key technical level, which is the 1480 mark. Now, if gold price breaks above 1480, there's not much resistance until we hit the 1522 mark. And now that's going to be very critical point for gold. It could be a point where gold continues to rally up towards the 1550 mark, maybe above, or there could be a reversal where gold price really falls from the 1522 point all the way back down to the 1400 support level. A break of that will just see gold drop down towards the 1350s and maybe even back down to where it was 2 weeks ago, down to 1321. So a lot of the technicals right now are really rely on all the fundamentals.
Finally, just briefly talk us through tomorrow's all-important NFP data and how you think it will affect gold.
What happens tomorrow could be very, very critical. If the numbers exceed or better than expected, I would expect a drop in gold price back down towards the 1400 support level. Now, if the numbers are negative, then we could see the 1480 level broken and gold rally back up into the 1500s towards the 1522 level. So that's what I'm looking at in the short term.
Okay, thank you, Mr. Kelsey, for joining me today. That's all from me for the moment here on Dukascopy TV. Join me tomorrow when I'll be discussing a selection of currency pairs with a top Forex specialist. If you want to find out just what those pairs are, you'll have to keep an eye on our Friday's Targets in Focus interview. But until then, goodbye.